Hello everyone, this is Juan Sarmiento and today is Friday, July the 1st. And don't think there is much activity lately. The volatility remains high, so new trades are not forthcoming. And so far this year we have made close to $12,000 and today not much money really. But let's take a look at each trade. That's all we can do. Starting with this AXP, and what you need to look at every time you look at the trade is what are the strike prices here, and you see the expiration of the short legs are the calls and the puts 165 July 29th. That's more than a week from now. In fact, it is 28 days from now, so that's good. We need to reset here the slices so we see exactly where we are. We're here, delta is negative, and we are trading at 138, and as you can see I lowered our strike price to 145. Since then AXP has declined some more. Let me take a look at the chart here, and I think it's sort of trying to set bouncing here, bounce. You can see the stochastic has gone up over the 20% line, which means that's a buy signal here. But don't be deceived, sometimes the buy signals fizzle, so it is just an indicator. And as you can see here, this candlestick is a hammer, which means we may be hammering a bottom. That's what they like to say, and so the market could go to test the Ichimoku cloud, which is very definitely red, which means it's bearish. And note that the company American Express is due to report earnings on the 22nd. If we take a look at the Analyze tab, well, our shorts are after that. So what do? Well, I need to take profits as much as I can and try to neutralize my deltas, because after earnings you may see a rally. But it's on the 22nd, so there's plenty of time. Nevertheless, how do I take my profits? Well, by selling puts and rolling them down. And I already rolled one. You can see that the original trade was this. Two long puts here at 165 September expiration. And I simply, because I have one short, well, the difference is one. And that one is, I call it the outstanding put in this case. And I could roll it down from 165 to 145. And now the stock is trading at 138. So I can take profits further by rolling this put further down, which means we're going to sell an expensive put and buy a cheaper one. So let's say analyze rolling. And if I were to close the put, analyze closing, you can see the value of it is 13.12. And we started here at 10.55. That was the price of it when I did the roll down. Okay, so if we were to do a roll down further from 145 to, let's say, 135, it's 138, you can roll it to 140 or 135. Let's try both. 130, 140, and same expiration would be September. Okay, so that's one possibility. Let's copy that, and instead of 140, let's go to 135, okay? And then you can see which one of the two gets me more money. Well, the lower, because the 135 is further cheaper. But what about the deltas? We want to neutralize our deltas. So if we do the 145, 140, our deltas are minus 29. If I do the other one, further down, is more neutral. Okay, so minus 111. 119. Okay, I think I want to do this, get a little more money out of it, out of the trade, yet it is neutral. And what happens is, let's say earnings come and the stock collapses over the earnings. Well, we would make further money if it really goes down. If it rallies from here, we could make more money on the upside, provided there is a big bounce. I doubt that, but you know, we simply are trying to collect money here and leave open the possibility of a jump in either direction. It's always possible, okay? And we have been taking our money out, so the value of the trade is less. So how do I figure out what the value of the trade is? Go to the monitor tab, look for American Express, and here you see the market value of it is 1700. That's how much money I have exposed in this trade. And that means part of it is my profit, part of it is the cost after taking all those rollovers. So let's do that, and then we come back. So keep this number in mind, 1722, okay? And let's do this, and then we re-examine how much money is on the trade now, if and when it gets filled. And here's 135 is awaiting a fill. Keep in mind that I'm going over the earnings in all likelihood. That's what I want to do, but I have taken most of my money out, so what I'm risking is not much. And who knows, maybe the stock collapses to 110 and then we make a whole bunch of money without risking much. We'll wait until that gets filled, and go, just remember the number 1722, that's the value. And it got filled here, and now you see 1722 became 1228. That's my real 1228 is my real risk of that trade. Okay, so I don't mind. You know, what's the worst that can happen? I lose it all. I'm not going to lose it all, but let's say I lose $300, $400, $500. Well, that's not too bad. Look at the year to date. Okay, so we are hoping to make a killing if there is a big movement in either direction, okay, without risking much. Okay, that was American Express. Let's go to DG. Go to the Analyze tab, and let's examine our trade. Well, we have two shorts here. One short 230 call, one short 230 put. The stock is trading at 246. Okay, so it's already moved quite a bit up to the upside, but it's still, look at the shape of this cyan curve. I want the stock to be over this before I can make any adjustments, meaning take profits by selling calls. Okay, so we have two long calls and two long puts. So the difference between the longs and the short is 1, and that's my outstanding call or put. In this case, I'm interested in the outstanding call, and I would roll it up. How? Well, I'm just going to say analyze rolling, and then we are going to go just sell one. We are selling one of the September 230 calls and buying a higher strike price. What would that be? Well, 250, 255, depending on what you like, what the resulting delta is. Okay, so I'm gonna 255. I'm gonna buy the 255, but instead of November, I make sure that it needs to be the same strike price in order to get $12,000, and you see that the deltas become 10. Currently, it's 28 deltas. If I do the rollover, then it becomes 10. Do I think the stock, just for sake of continuity, oh, it's been doing really well, and now it's bullish, okay? So the Ichimoku cloud is bullish, so I tend to be bullish. I mean, it's not going to be on forever, but it looks like it's in an uptrend here, this stock, okay? Good. And so I prefer to leave it like this for the time being. Oh, look, let me reset the slices so that I'm sure that I'm here, not there. Okay, and I want the stock to go over this smiley face before I do any adjustments. So it needs to be above 250, and at that time I could make this adjustment and it would be a whole lot more than $11.90 times 100. Okay, let's look at the chart again. Okay, perhaps next week we'll see a big move up, who knows. For the time being, I want to leave it the way it is and just look at the smiley face as your point of adjustment. Let's go to the UPS. Okay, UPS is about the same. We have 2 short calls, 2 short puts, 4 long calls, 4 long puts. Okay, is it really, am I losing money there? Well, let's go to the monitor tab and go back and see. Yeah, this trade was adjusted before. So when you look at this, this is misleading. I'm not losing $745. I need to see the 2 of these trades combined, the original and a rollover that I already did. So let's copy this, say analyze opposite. I'm sorry, I shouldn't have done that. Let's just hide positions. That's not what I wanted. I just say analyze trade. I don't know why I say analyze opposite. Analyze trade. Okay, so that's the original trade, and this is the rollover. And that is the reality. I have $305 in profits. Okay, and that's what the trade looks like. I can erase that now if you want to. Okay, so July 29, that's quite a while from now. So this is my trade right now. Okay, and I'm happy with that. It's bullish looking. Let's take a look at the chart. Oh yeah, it looks strong, but now we have earnings coming up, and that is on the 26th. Okay, next week we have to make a decision. Right now it's not necessary. Okay, and that's about it. I don't have anything else. Let me just take a quick look at the markets. It looks like it's going to go down. Perhaps this is the time we need to watch this, because there might be a strong bounce from here. This might be simply a pullback from the strong rally, a little pullback, and then it might go to the Ichimoku cloud. It remains red, as you can see, which is bearish, and it tried to approach my 161.8. Yeah, I think it might bounce from here. Then again, who knows? We'll have to see. I remain bearish because we have this red Ichimoku cloud. You may have a further pullback to the 161.8. But let's just say if it makes a double bottom, I would be happy with that. That would be the at least a reprieve from this bearish trend that we've had for several weeks now, months. I wouldn't say that this market is done with bearishness. You would have to see a strong move up and cross the Ichimoku cloud. If it does, then you say, okay, we're back to bull market. This, I don't have any evidence of that yet. This looked like really strong move here a few days ago, but the market continued lower, which makes me doubt that that this is for real. Not this one. We'll see if in the next few days, if you get a big bounce, and if it crosses the Ichimoku cloud, see if the Ichimoku cloud turns yellow, then we might be back to a bullish market. So for the time being, I'd just rather stick with these 3 trades. I don't have any new trades to suggest because the volatility is high. If you take a look at the VIX, Let's put it here. Yeah, it's still quite high at 27, so this is no time to choose any new ones, new trades. So we'll have to see until the market comes down to this more familiar level, lower level, before entering new trades. And that's about it. That's all for today. Thank you very much for joining me, and see you next time. Bye bye.